Hey everyone, I've got something pretty interesting to talk about, and I think you'll want to stay until the end because we're diving deep into a technology that's got people buzzing like crazy. You might have heard about quantum computing before. Maybe you just saw a headline about those futuristic machines that can do calculations faster than anything we've ever seen. Or maybe you've heard about a small company that's been working on these cutting edge quantum processors, and from time to time, its stock just skyrockets or tanks just as fast. Today, I'm going to walk you through why I think this particular stock, Rigetti Computing, might be worth keeping on your radar if you've got a case for exciting long term opportunities. I'm not telling anyone to gamble the house on it, but if you're the type who likes to throw some chips on the table in exchange for some massive potential returns, well, that's the story I'm about to share to you. So let's kick this off by explaining what quantum computing is very quickly. If you're new to this, a super short version. It's the next level computing technology that uses something called qubits, which can exist in multiple states at once, unlike your classical bits that are either 1 or 0. In theory, quantum computers can handle mind boggling amounts of data in parallel and solve certain problems that classical computers just can't tackle efficiently. The dream is to see quantum machines crack huge optimization puzzles in logistics, accelerate breakthroughs in drug discovery, or even revolutionize how we tackle climate modeling. But here's the thing, quantum computing is still in its very, very early days. And I don't mean just a couple of months to go. Early, I'm talking about years, maybe even decades before we see fully mature systems that can take over tasks on a grand scale. That's where some folks get anxious. We've seen some high profile statements from big tech leaders. One CEO in particular commented that the useful quantum computing might be 15 to 30 years away. That kind of talk freaks out some investors, causing them to dump shares in quantum companies. But if you step back, it really shouldn't be surprising. Building these systems is expensive, complicated, and slow. However, for the patient investor, that might be exactly where the long term opportunity lives. Now, if you haven't been keeping up, Rigetti Computing stands out because they focus on superconducting quantum technology. Think of superconducting qubits as a tiny circuits cooled to near absolute zero, which sounds sci-fi enough. The big selling point is they operate lightning fast, dealing with operations in nanoseconds. On the flip side, those super fast qubits can have trouble with error rates, meaning the fidelity or the reliability of computations might lag behind other approaches like ion trapping. Another quantum company using ion trapping technology has shown slightly better fidelity but slower speeds. It's a classical trade off. Do you want something that runs faster but might produce more errors? Or do you want something that's slower but more precise? Rigetti's basically betting that if they can tackle error correction and keep the speed advantage, they'll grab a piece of the quantum computing pie. Now let's look at the bigger picture of quantum computing development because it's helpful to understand the different stages. Right now, many companies, Rigetti included, are in what some folks call the emerging quantum advantage phase. Basically, a lot of R&D, proof of concept stuff, demonstration of quantum capabilities, and so on. But not quite anything that outperforms classical computers in a mainstream way yet. The next milestone is narrow quantum advantage. That's when quantum computers prove they can do specific tasks that classical computers can't handle as efficiently, or maybe they do faster or cheaper. After that, you get to broad quantum advantage. That's when most people start using quantum computers for practical real-world applications. And then, at the holy grail is large-scale fault-tolerant quantum computing. Think fully matured machines that are accurate, scalable, and can run complex algorithms without the crippling error rates you see today. Rigetti is trying to move us towards that future by focusing on building those machines in-house. They've got their own fabrication facility, sometimes called the Fab 1, where they design and manufacture their own quantum chips. That in-house approach is supposed to give them more control over quality and tighter feedback loop, so they can keep iterating quickly without relying on a third-party chipmaker. They're also working on modular architectures, meaning they build smaller chips and then stitch them together, theoretically giving them a way to scale up without throwing away their entire design each time. The idea is that if you can combine multiple smaller chips that each have high yields, you can build quantum systems that don't suffer from the production challenges of a huge monolithic chip. Now, when we talk about a company's actual business model, that's where things get more grounded. Sure, building a quantum computer is cool, but how do you make money off? Right now, Rigetti's mainstream source of revenue comes from development contracts, often with the government agencies or research institutions. They're also looking to push quantum tech. We're talking about specialized projects in defense, energy, or advanced analytics. As for the future, They have something called quantum computing as a service. It's in the pipeline right now. You've ever heard of software as a service, right? Think of this as the same idea, hooking up to a quantum computer through the cloud, paying for usage, and not dealing with the messy hardware yourself. That's the big chunk of the overall quantum computing value propositions in the coming years, letting businesses, researchers, or even hobbyists access quantum resources online without needing their own setup in the basement. One reason some folks will shy away from quantum stocks is that they're impossible to evaluate with normal metrics, like price to earnings or free cash flow. These companies tend to have tiny revenues, big R&D costs, and will probably need to keep raising capital until they reach the point where the technology is stable enough to generate significant revenue. Rigetti is no exception. They've been burning through cash to fund development, and they've been raising capital multiple times, including a big round not too long ago. Some also worry about shareholder dilution. Every time a company issues more stock, it effectively splits the pie into more slices, so each share might be worth less. But that's par for the course with venture-like investments. If you think about early days of some of the bigger tech giants, they also had to survive multiple funding rounds and a lot of negative cash flow before they finally turned the corner. But let's not pretend it's all smooth sailing. The biggest risk in quantum computing might take longer than we hope, even if it becomes commercially viable in certain niche areas soon. Widespread adoption might come at a much slower pace. If that's the case, companies like Rigetti might keep burning through cash. There's also competition. It's not just IonQ or D-Wave, but also tech giants like IBM and Google. Sure, you can invest purely in IBM's quantum business because they're a huge company with multiple divisions. But you know they've got deep pockets to fund quantum research. Then you've got Google throwing a ton of resources at quantum as well. Rigetti's bet is that it can keep innovating faster in superconducting qubits, maintain an advantage with its modular approach, and maybe carve out a profitable niche, or even become a go-to provider for certain applications. As for whether you should buy or avoid the stock, it really depends on your personal risk tolerance. I'm personally leaning towards a pro stance here because I see quantum computing as a massive opportunity in the long run. If we're talking about life-changing gains, these are the type of early-stage companies that might deliver them, though they could also collapse if the tech doesn't pan out or if someone else beats them to the punch. It's a classic high-risk, high-reward scenario, and if you're willing to set aside a portion of your portfolio for riskier plays that you don't plan to touch for years, maybe even a decade, that's when something like Rigetti starts looking interesting. Short-term traders might get a whiplash from the volatility. One offhand comment from a high-profile tech leader can send these stocks plummeting because it reminds people how far we are from large-scale quantum computing. But those who are in it for the long haul can ride out those bumps, betting that the technology will find its footing eventually. Looking at the roadmap, Rigetti's got several milestones planned out for the next few years, like unveiling new qubit systems with better error rates. They're talking about hitting 36 qubits with decent fidelity and later shooting for 100 qubits with similar improved error correction. Then down the line, they're eyeing a 336 qubit system. Hitting those goals on schedule could be huge for their credibility, especially if those systems can demonstrate real performance improvements for tasks like advanced optimization, simulations, or big data analytics. On the commercial side, I expect them to keep focusing in on government contracts because that's where immediate funding can come from. Governments around the world are pouring money and more money into quantum research, seeing it as a strategic investment for national security and scientific leadership. Now, speaking of the bigger market, analysts think quantum computing might surge from a modest market size to tens of billions and eventually even hundreds of billions of dollars as the tech matures. Industries like finance, pharma, logistics, and energy all have a complex problem that might benefit from quantum speedups. Imagine being a bank that can optimize risk analysts much faster, or a pharma company that can search through molecular structures in a fraction of the time. The potential is huge, but again, we're not there yet. That's why valuations in this sector can get kind of crazy. People are pricing in what might happen 5 to 10 or even 15 years down the road. If you dive into the numbers, you'll see sky-high multiples like forward EV sales of several hundred times. By normal standards, that's outrageous, but so was Amazon's valuation in 1990 or Tesla's in the early days. Sometimes you can't judge an emerging company by the same yardstick you use for an established business. Now, let's also not forget about the hype cycles, right? Whenever a sector becomes the next big thing, you get a wave of speculative money chasing it. That can shoot stock prices right through the roof overnight, and then they can crash just as quickly. Quantum computing stocks have definitely seen their share of that roller coaster. We've seen sudden rallies and sharp sell-offs triggered by big announcements or even casual statements from someone about how long it might take for quantum to become mainstream. That volatility can be brutal if you're not counting on a stable investment. So you need the right mindset going in. On the plus side, some major industry names do see a path where quantum computers start finding practical uses well before the 15-year mark. Certain niche applications, maybe optimizing supply chains or specialized forms of cryptography, that could pop up in the next 5 years or so. Companies like Rigetti only need a few real wins to start bringing in more meaningful revenue, which in turn could attract more partnerships, fueling their further R&D. The more serious use cases develop, the more likely it is that quantum tech will keep marching forward. Now, at this point, you might be wondering why Rigetti instead of some of the other quantum players. As I see it, Rigetti has an edge in speed with their superconducting qubits, plus they're controlling their manufacturing chain, which might make them more agile. They've also been building relationships with key government agencies and research institutions. That's a good sign if you think these institutions will keep funneling money into quantum projects. While it's not profitable right now and probably won't be for a while, that's the nature of the beast. Early stage tech companies, whether they're in space exploration, biotech, or quantum computing, often require big capital infusions. The question is whether they'll manage to keep their pipeline open without flooding shareholders with new stock, and whether they'll eventually develop a platform that pays off big. One more area to watch is how Rigetti handles its product roadmap. They've been talking about rolling out a 100-qubit system with error rates around 99.5%. If they can demonstrate consistent progress with these error rates and qubit scaling, it'll be easier for them to market these systems to both government and commercial clients. If they get stuck or have to push out timelines, that can crush the stock, because a lot of the hype is built around their technology leadership. Still, they're definitely not the only ones in the race, so they'll need to stand out some. And that leads me to my concluding thoughts. Why would you consider buying Rigetti stock, given all that uncertainty? If you're someone who's got a diverse portfolio and you can afford to lose the money you put into a speculative play, Rigetti might be an intriguing ticket to the future of computation. The quantum market could explode in the coming decade, and companies that survive these early years could see enormous returns down the road. Rigetti's in a respectable position with its superconducting tech, modular chip designs, government ties, and ambitions for QCAS, which is their software as a service equivalent. They're betting big on speed as a differentiator, and if they keep driving down error rates, they might actually deliver quantum computers that solve certain problems faster than classical machines. Yes, it's a roller coaster. Yes, the valuations can seem nuts. And yes, they'll likely need more funding, which could dilute your shares. But if you're a big believer in quantum computers long term, those might be hurdles you're willing to accept. That's the argument for hanging on to Rigetti shares or even scooping up shares when the market freaks out over extended timeline. If you've got the patience to ride out the turbulence, you could end up with a piece of the tech that reshapes computing as we know it. In short, I believe Rigetti's a buy, and only if you're fully aware that it's not your typical stock pick. It's not something that's going to pump out stable earnings next quarter, and it's not a safe defensive play. You'd be buying into a future that might still be a decade away or even more. In short, I believe Rigetti's a buy, and only if you're fully aware that this is not your typical stock pick. It's not something that's going to pump out stable earnings next quarter, and it's not a safe defensive play. You'd be buying into a future that might still be a decade or even more away. But if you can look past that and imagine a world where quantum computers deliver real solutions to massive computational bottlenecks, then Rigetti's focus on superconducting qubits, their in-house chip manufacturing, and their drive towards improved fidelity could eventually pay off in a big way. That's why I'm giving this one a thumbs up for anyone seeking a high-risk, high-upside investment in the quantum revolution. Just be sure to keep your eyes on that long game, because quantum computing's not for the faint of heart. It might take a while, but if it does succeed the way many are predicting, you'll be glad you hopped aboard this rocket ship early. That's it, guys. If you liked the video, please hit that like button and don't forget to subscribe for more of my videos.